Good morning, student. In last class, we have discussed about the profit, loss, income, gains, purchase return, sales return, and also know the types of liabilities. There are two types of mainly liabilities: uh, intangible liabilities, or you can say external liabilities, and internal liabilities. In external liabilities there are two sub liabilities, that is non-current liabilities and current liabilities. Okay, but today we are going to discuss about the types of assets. So there are three types of assets. First, non-current assets, second is a current assets, and third is a fictitious assets. In non-current assets we call that is fixed assets, and this is the long-term investment, and in this assets all the fixed assets come in this category, like building, furniture, machines. These are the fixed assets. Current assets, this is the active assets. It's a short term investment, like debtors, bills receivable. Debtors we know very well, when we sell in a credit, so the party will give the payment in later, so this is also a asset for the company. Bill receivable also, this is the part of current assets. Next come to the fictitious assets. What is the meaning of fictitious assets? It is the imaginary assets. How? These are the assets which cannot be realized in cash, or future benefit can be derived from these assets. Such assets include the debit balance of profit and loss account. Debit balance of profit and loss account, it means it is a loss, and it will be mentioned in the balance side. Why? Side, it means asset side. Why we are writing loss in the asset side? It means it covered by the parties, so business also take this loss from the parties, so that's why the business consider this is the assets. And the expenditure not yet written off, such as advertisement expenses, deferred expenditure, this is also shown in the asset side. Advertisement expense, this is the assets considered in the business, because the business spend a lots of money to for advertisement. And this as advertisement, the business thought this is the investment for the business, so this is considered as a assets. Why? Because through the advertisement all the customer come in the business, and definitely the business will get a profit with this advertisement. Deferred expenditure, there are lots of expenditure include, like preliminary expenses. So these types of assets, when the business is stable, so that time the business expend lots of money for establishment, like legal charges, registrations fees. So also business feel this is the assets for the business, now they are expanding. So this is all about the types of assets: non-current assets, current assets, and fictitious assets. Now we are going to know more about the non-current asset, it means fixed assets. You can see there are two types of non-current assets, that is tangible assets and intangible assets. What is the meaning of tangible assets? Tangible assets, it means it is a physical existence. Physical existence, it means we can see, we can touch, like machine, building, furnitures. So these types of assets, that is the considered in a fixed assets, we can see and touch. What is the meaning of intangible assets? Intangible assets we can't see, we can't touch, but we can feel, like goodwill, patents, copyright, trademarks, computer software. These are the intangible assets. Next, so this is all about the types of non-current assets. Next, that is capital received, revenue received. Okay, so what is the meaning of capital received? What is the meaning of revenue received? Capital received is a irregular receipt. This is not happening every day. This type of receipt sometimes is received. How? Some examples here, like loan taken from bank. This is a capital received. Why we are saying capital received? Because it is increase the capital of the business, and this is the heavy amount, and sometimes we are doing these types of activity to get a receipt. So this time when we doing the take a capital receipt, that time our liability will be increased and assets will be decreased. Loan taken from bank, so this is the liability, but this is also a considered, that is capital received. Why capital received? Capital, what is the meaning of capital? When owner invest the money in the business, that time we are saying this is the capital, and we are writing in the balance side, in the balance sheet in liability side, because the business thought this is the liability for the business, and we will return this amount in later. So that's why the capital right in the liability side. Same things, that is capital receipt, but we are writing in the liability side because business feel this is the liability for the business. Sometimes we sale of machines, capital introduced by owners, additional capital or capital. Okay, issues of shares. So these types of capital received we considered in the capital received, and this received not show in the profit and loss, because in this case this is like a investment, so we are not showing in the profit and loss account, only we are showing this types of receipt in balance sheet in liability side. Next, not only liability side, because when we take a loan, so what is the entry, what will be the entry? That is the contra entry. Okay, I will tell you later. Next, uh, revenue received. Received, it means it a regular received. It will be happening in a day to day life, and it will increase the profit, and it will show in the profit and loss account. Sometimes we sells a goods, so we get a money. This is the revenue received. Received commissions, interest received, rent received. So these types of receipt we call, that is the revenue received. Hope so this is the clear for you what is the difference between capital received and revenue received. Next, that is capital expenditure. What is the meaning of capital expenditure? Any expenditure which is incurred in acquiring or increasing the value of the fixed assets is treated as capital expenditure. It means whatever we expend, so that time our assets will be increased, that is the capital expenditure. As such, the spend amount on the purchase or erection of building, plants, furniture, etc. is a capital expenditure. It is not deduct from profit but added directly in assets. When we purchase a furniture, so we just added in the asset side, there is a mention the machine, so we add more amount there, we add more amount in furniture. So this is the capital expenditure. It means it is increase the assets. Obviously we are purchasing the fixed assets, and that time we are giving a money. So our assets will be increased, and but this is the expenditure also. So why we are calling capital expenditure? Because it is related to the fixed assets. We are purchasing fixed assets. Now next is a revenue expenditure. First we know capital received, revenue received, and capital expenditure. And what is the meaning of revenue expenditure? Any expenditure the full benefit of which is received during one accounting period. What is the meaning of one accounting period? It means it start 1st April to end 31st March. This is called accounting period. Is termed as revenue expenditure, such as cost of goods sold, salaries, rent, electricity charges, purchase of raw material. These types of expenses we are saying that is the revenue expenditure. This is also a related to expense. So we are expending money, but where sometimes we are payment salaries, rent, electricity bills, purchase some raw materials. So this is all about the revenue expenditure. Hope so that is clear for you. What is the meaning of capital received, revenue received, capital expenditure, and revenue expenditure. And this is most important, that is a deferred revenue expenditure. When we discussed about the fictitious assets, that time I said about the deferred revenue expenditure. So this is most important, and you should know about the deferred revenue expenditure. These are certain expenditure which are revenue in nature. Okay, this is a revenue in nature, not a capital in nature. Okay, but the benefit of which is likely to derived over a number of years. But this expenditure give a benefit in a future, not currently. Such expenditure are termed as deferred revenue expenditure. Which types of expenditure include here? Like heavy advertisement campaigns cost. The business always expend a money for the advertisement, and that time the business expend a heavy amount of money. So in this case, this is the expenditure of the business, but that will be the benefit, that will give the benefit in the business in future. And this is the also a part of the fictitious asset, because we can't see and we can't touch. This is the imaginary. Next, preliminary expense. Also I said what is the meaning of preliminary expense. This is related to the when we establish the business, that time we are giving a legal fee, registration fee. So this is also a considered in the deferred revenue expenditure. This is not a regular we are doing one time, two times this is happening, but preliminary, this is the one time investment. Next, major repair and renovations. Major repair, sometimes business repair the fixed assets like furnitures, building machines. So that time also business expend a money. So this is come in the deferred revenue expenditure. And one more examples for deferred revenue expenditure, that is research and development cost. Business research something to produce better and use the technology for the better production. So this time also the business invest a money. And compensation to employees. Voluntary retirement, sometimes the employees take a voluntary retirement, so that time the business give a huge money to the employees, but this is the one time expenditure. So this is all about the deferred revenue expenditure. I hope so this is clear for you, and this is the last topic for today, that is the what is the meaning of expenditure. And also we have discussed the capital expenditure and revenue expenditure and deferred expenditure. But what is the expenditure? Any disbursement of cash or transfer of property or incurring a liability for the purpose of acquiring assets, goods or services is called expenditure. Whatever we are occurring in assets, goods or services, so that time we are expending a money, that is called the expenditure. It means that any types of payment for the receipt of a benefit in termed as expenditure. Any type of payment. Okay, it definitely when we payment we get something and it will be give the benefit in the business, that is called the expenditure. In the expenditure we include, you can say this is the formula also, expense plus purchase assets, or you can say capital expenditure and revenue expenditure equal to expenditure. So in expenditure both the expenditure come, that is capital expenditure and revenue expenditure. Some example of expenditure: buying building, machines, paid salaries, purchase raw materials. So these types of expenditure include in expenditure. These types of expense is include in the expenditure. So this is all about the basic terms of accounting. Hope so this is clear for you, because when we will prepare and prepare a questions, so that time these types of terms definitely will come. So that time you will not feel this is the very new words for you. So must revise again, and please watch 2 or 3 times for more clarification, more clarity. Thank you. Please like and subscribe and also share with your friend.